प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है। The future of finance is on fire. India's big crypto TRYST has begun. Late on the cryptocurrency bandwagon? Don't worry, we have you covered. As government gets all set to regulate, join us for total clarity on crypto. Simple explainers, sharpest analysis. Fastest updates from India's #1 crypto reporters. Nobody covers crypto like India today.
Take cryptocurrency or Bitcoin. It is important that all democratic nations work together and ensure it does not end up in wrong hands.
When the Reserve Bank, after due internal deliberation, says that there are serious concerns on macroeconomic and financial stability, there are deeper issues which need much deeper discussion.
It's chaos which could very well have been avoided. Crores of Indians went into total panic yesterday when it was revealed that the government planned to prohibit all private cryptos in the country. A day later, confusion still reigns, with no one wiser to the real intentions of the government.
It was a terrible end to a Tuesday for crypto players and investors in India. It was at around 8 p.m. that news broke about new laws to be tabled in the winter session of the parliament, which could shatter the crypto dreams of millions of Indians. The reaction was swift and brutal. Crypto prices crashed, wiping out fortunes as panic hit investors who had just one question: what happens if India bans cryptocurrency? In an overnight bloodbath, Bitcoin fell 17%, Ethereum was down 14%, Dogecoin over 20% down, and Polkadot 14%. Even dollar-pegged token Tether was down nearly 17%. The phenomenon was largely limited to India, with prices relatively stable in the international markets.
We've seen this happen even in Feb 2021 when the same description, same listing was done in the list of bills to be presented. And in 2 to 3 days, it normalized and it was back to normal. Need to see how this how the next few days evolve. But I think right now it's also recovered a bit from the worst. I think it'll recover back. Those 1-2 days of panic selling is what we're seeing right now.
While regulators have expressed apprehensions about these digital currencies for long, there is currently no regulation or any ban on their use. The industry was optimistic because the Supreme Court had already quashed RBI's ban on the digital currency. Also, government had been sending out feelers that it was willing to work with industry players to thrash out working rules. There have, however, been warning signs that authorities were not truly happy. At the Sydney Dialogue last week, Prime Minister Modi called on democracies to work together on cryptos and ensure they did not fall into wrong hands and corrupt the youth. The RBI governor has repeatedly expressed concerns about cryptos being a threat to the country's macroeconomic and financial stability. Even market regulator SEBI has said in the past that cryptocurrencies cannot be a commodity. According to industry estimates, there are 15 million to 20 million crypto investors in India, with total crypto holdings of around 40,000 crore rupees. Figures the industry is using to make its case with the government. Meanwhile, the plunge into crypto prices has been halted and there has been a slight recovery on the belief that an outright ban on cryptocurrency is unlikely. Though crypto players have their fingers crossed on the kind of regulations they can expect in the coming days. With Bisma Malik, Bureau Report, Business Today Television.
The government has pulled the rug from under the feet of cryptocurrency investors. Speculations are rife and investors are worried as the government plans to introduce the cryptocurrency bill in the winter session. The government may take a decision on banning virtual tokens. So what happens if the government decides to ban cryptocurrency?
The first reaction is almost immediate and often the most desperate. Sell. And that's what happened Tuesday night. Investors, spooked by the news that cryptos could be banned, offloaded them in a hurry at whatever levels they could find buyers at. For those who can wait, there is also the option of transferring their crypto assets to global exchanges where they can be sold easily. Experts also give the option of transferring cryptos to global wallets. If the government in fact bans cryptos in India, they may give investors a time frame to exit their investments. So what is the Modi government's proposed bill on cryptos likely to have? The bill talks about three aspects of cryptocurrencies. First, facilitate the creation of an RBI-issued digital currency. Second, prohibition of all private cryptos. Third, allow certain activities to enable the underlying blockchain technology. The government believes that cryptocurrencies cannot replace traditional currency. You're wondering why though? Well, first, according to them, the vulnerabilities in the crypto design leaves consumers open to cyber attacks. Secondly, since the transactions are irreversible, there's no way to redress wrong transactions. Lastly, the centre fears that the unregulated market may become an avenue for money laundering and perhaps even a terror financing hub. Amidst the panic selling by Indian investors, crypto exchanges have sounded an optimistic note, reassuring investors that crypto is here to stay. In a note to its investors, CoinDCX has asked investors to be patient and wait for this volatile phase to end. While many have written off cryptos, others are waiting with bated breath in anticipation of some good news from the government's end. For now, the fate of cryptos in India hangs in the balance. Bureau Report, Business Today Television.
The government of India had in 2019 tried to ban cryptocurrencies, for which a bill, Banning of Cryptocurrency and Regulation of Official Digital Currency Bill 2019, had been tabled in Parliament. The bill was withdrawn after Supreme Court quashed RBI's ban on cryptocurrencies. Business Today TV's Karishma Asudani spoke to Subhash Chandra Garg, the author of the 2019 legislation, and began by asking him about the hard stance against cryptos as a currency.
See, that rationale is clear. The currencies is a sovereign function. The currencies which we use to trade, make payments, remittances and all is essentially a sovereign function. That is where the biggest trust comes into it. Private currencies, you can print any, you can bring out any number. There is no regulation, there is no control. Just imagine for a minute that if the private industry or private entrepreneurs were allowed to print paper currency, the banknotes which the Reserve Bank issues, suppose they were allowed to be printed by the private entrepreneurs, how would that work? They would simply flood because the cost of printing the note is almost nothing. If you print 1,000 rupees or 2,000 rupees note, it might actually cost you hardly about 2 rupees or 3 rupees, or maybe not even that much. Right. So likewise, the private cryptocurrencies, the cost of creating currencies is almost next to nothing. So how can a system function where the real goods and services are traded by a currency, a private currency, which can be limitlessly printed? So that system is not feasible. It's not workable. It's going to be dangerous, and therefore, private cryptocurrencies or private banknotes or private anything of as far as currency is concerned, I don't think that's a workable idea. That should be banned. That has no space.
Right. But so what happens to the investors? I mean, these are a lot of investors who've invested a lot of money, and especially if we talk about the millennial era, last 1.5 year in the COVID times, the youth has invested a lot.
See, that is the complexity about crypto ecosystem. They are not merely currencies. They are doing a lot more. There is value there. For example, if you take, let's say, Ethereum. So today, Ethereum is emerging as a global digital platform to create applications, to provide lots of services. For example, just so the banking and non-banking system exists for financing today. So you extend credit and all, but similar financing facilities are emerging as decentralized finance on the other platforms like Ethereum. Similarly, many assets are getting created. You've heard about NFTs and all. So a lot of valuable assets, and that's possible. You can have a print, an artwork which is done on physical paper or canvas or something. Likewise, you can digitally create artwork. You can create a lot of services, music, games, other things on the crypto platforms, and that is what is happening elsewhere. The complexity is that the crypto system works where a lot of these things, the goods, services, assets, currencies, get enmeshed, and they become one single kind of manifestation as currencies. So the ability of the governments and the society to segregate the value from the non-valuable things like currency is still not figured out. And that is what the millennials are being driven by, that valuable thing which is being created on that. The underlying technology of blockchain and cryptography is a very robust, very innovative technology, and it will give a big run for its money to the traditional database or centralized technology on which today's financial system runs.
The government is all set to move a big-ticket reform in the winter session of Parliament. Among the bills listed for tabling is the Banking Laws Amendment Bill 2021, aimed at privatizing 2 public sector banks. This is part of this fiscal's disinvestment target of 1.75 lakh crore rupees. The Finance Minister had announced the government's intention to privatize 2 banks in her budget speak earlier this year. The 2 banks have, however, not been named yet and are unlikely to be named in the bill. Among PSU banks, shares of the Indian Overseas Bank and Central Bank posted the highest gains in trade today. Rakesh Jhunjhunwala backed Star Health Insurance is going public. The IPO, which opens on November 30th, has set the shares price band at 870 to 900 rupees per share. The shares of the company have recorded a strong demand in the grey market. In a conversation with me earlier, the management talked about their plans with the fundraise and strategy ahead. What are you planning to use the funds for, the IPO proceeds? How are they going to be allocated?
See, the proceeds, like, the offer for sale is around 5,500 and our primary fresh issue is close to 2,000 crore. And this 2,000 crore will be utilized for our, company's investment and solvency purposes. Overall, we see that there is going to be greater responses in the year to come, because the one-time impact of the pandemic and one-time impact of the accounting pattern and reinsurance arrangements that we have probably created a loss for last year and H1 of this year. But going forward with this infusion and with the internal accretion that we are envisaging, we should be comfortable on our solvency.
You're watching Ask Udayan, the show where we answer your questions on stocks. I'm Abha Bakaya, and with me, our very own global business editor, Udayan Mukherjee. On Ask Udayan, we'll be discussing strategies to smartly invest in quality stocks. Do continue to send in your queries to the number on your screen. Let's kickstart with our first viewer query this week, coming in from Sumit Paul in Kolkata. Listen in.
I have 400 share of NMDC bought at 158. I'm a medium-term investor. So should I hold or I should exit from NMDC?
Well, you're sitting on losses right now, and that's never a good position to be in. But NMDC has been such a volatile stock. It was 100 rupees at the start of the year, then it shot up to 200, and now it's come down to about 130, 135 kind of levels. So you've bought somewhere in between. I think the reason why the stock has corrected is because global iron ore prices have also softened quite a bit over the last few weeks. And that inevitably, current quarter onwards, will start affecting NMDC's profits. Also, the kind of royalties that NMDC has to pay, that is steadily climbing. So between the two, the squeeze in iron ore prices and the higher royalties, I suspect that NMDC's profits will not grow significantly. And that's something which the market has been slowly building into the price of the stock. But having said that, there is a trigger in the NMDC company, which is that they are actually about to commence or commission a 3 million ton steel plant. And the talk is that they will demerger that steel business from the core iron ore business. Now, when that plant is commissioned and the demerger news comes in, you could get a possible fillip in the stock, and that might give you an exit opportunity. So now that you're sitting on losses, it might make sense to wait for that steel business commissioning to happen and then try and get out of the stock. But very long term, I don't think, given where we are in the metal cycle, it makes sense to hold on to NMDC beyond a point. There are much better stocks to bet on.
Let's take another query from Sanjeev Batra in Jalandhar. Go ahead, Sanjeev.
Hi Udayan, I have been holding 300 shares of BHEL at an average price of 100 for 3 years. Should I hold or sell it?
No, I don't think you're doing yourself any favors by holding on to that name, because I know there is a lot of excitement about a new capex cycle in India, and that's why people want to look at BHEL. But I think what they fail to understand often is that the capex which feeds BHEL's revenues actually comes very heavily from the thermal power segment. And thermal power, as you know, is a sort of a segment in decline, long-term decline, and therefore BHEL's revenues, which are still trading at, quite a bit below the pre-COVID revenue line, I don't think will grow very significantly over a period of time. I mean, case in point, the recent cancellation of the NTPC power plant's order to BHEL tells you that the thermal business is in all kinds of problems. So there is a fundamental issue with BHEL's business model, and that is not made better by the fact that it has a very bloated workforce. I mean, how many companies do you know which have 30%? I mean, the workforce salary or costs is 30% of the revenue line. I mean, that's humongous. Now, to carry that and to make money out of revenues coming in from the thermal business is going to be an uphill task. So you might get periodic rallies, etc. I don't know if the government will talk about divesting BHEL at some point. It's a wild card. But I think left to core business fundamentals, I think it will be very difficult for the stock to climb above your purchase price of 100 and make you any serious money in the long term.
Okay, our next query is from Viraj Kapoor in Delhi, and he's got a query on one of the stocks in the real estate segment. Go ahead.
Hi Udayan, what is your view on DLF? Can you please suggest?
Well, the real estate sector has had a turnaround, as you know, which is probably why you're asking about DLF. I think DLF is doing quite well compared to the last few years. I mean, it's Project Camellias in Gurgaon is getting rave reviews and very strong sales in that. I think prices in most cases are up about 20% from the, 1 year back. So both from a realization and volume point of view, DLF is doing quite well in the residential segment particularly. They've got some very aggressive new launches in NCR, in Gurgaon, in Gurugram, in Noida, in Chennai, in Panchkula. So I think the pipeline for the next couple of years looks quite exciting from a residential point of view. The only issue that you need to be a little careful about is that DLF has doubled. The stock has doubled in the last 1 year. Real estate is a high beta sector. If the stock market is going in for some kind of a corrective phase, you might see some of the froth coming off the real estate stocks, and DLF is no exceptions. So technically, I think the stocks might go in from into a corrective phase, but from a 2-year kind of a perspective, I think real estate as a sector from an investment point of view probably makes sense.
An interesting question from Sanjeev Kumar in Delhi, and he's got one on Voda Idea. Let's listen in.
Hi Udyan, I'm Sanjeev. I'm holding 50,000 shares of Voda Idea. What do you suggest? Thank you.
No, I'm not very optimistic about that name because it's frankly it's become a trading stock, and that's why a lot of traders are interested, because it trades in a very broad range of 8 to 12 rupees. 8 to 12 seems like 4 rupees, but it's a 50% range. So very few stocks give you such a wide trading range, and therefore traders try to scalp a few paise this way and that on the Vodafone Idea name. Sometimes they're successful, sometimes they're not. But to make a fundamental investment case for Vodafone Idea is very difficult, because the headwinds are very, very severe on that name. They need to raise capital quite desperately, frankly, because they've got a balance sheet to repair. I think the net debt to EBITDA is something like 33, 34 times, which is just unimaginable. And they need to spend money in wresting back some of the market share, which they're losing steadily every month. So on both fronts, capital is essential. I mean, it's like oxygen for them right now. But let's see if they're able to raise that in the next few weeks. If they do, you'll get a little bit of a fillip in the stock once again. But I think fundamentally, given that they have two such strong competitors and market leaders in Jio and Bharti Airtel, that it's very difficult to make an investment case, frankly. A trading case one can make from time to time, but a long-term investment case is very difficult.
Well, then, thanks so much for your time. That's all the questions you could take on today's edition of Ask Udayan, but do continue to send in your queries on the number on your screen. We'll take them again next Wednesday. Until then, goodbye.